Episode 15 of Sir Ulric Host Money Matters. I have the privilege of bringing on a great guest. This guest I've collaborated with. I've communicated with him in the deepest depths of Bitcoin maxi territory. And he has risen to heights that only a fiat ETF can take you. I'm talking to Sina G, co-founder of 21st Capital. How are you today?
Hi, man. I'm great. I'm great. I'm excited to be chatting today.
And the thing about what I said there is you are a tried and true Bitcoin maxi. I met you. We hung out for years in the Telegram circles. Um, but at the same time, you're a brilliant Bitcoin consultant, researcher, analyst, and you bring your fiat world understanding, you being a university professor, into the value creation economy of Bitcoin, and you have brought knowledge and understanding and perspective to the world, primarily, at least recently, in regards to the Bitcoin ETFs. How did you how did you get into, like, what made you say that the Bitcoin ETF was the thing that you needed to focus on? What was the trigger point for that?
That's a great question because it kind of touches on my long-term pain point, which was, you know, keeping Bitcoin just as a hobby and not being able to kind of move it higher to something that I can spend more time on. Because once it's a hobby, you have limited time. But once you love something, you can't get enough of it. But I had to kind of find a reason to spend more time uh, and invest more. So I was, at heart, I'm a capitalist. Capitalism is about finding resources and putting them to work to produce value. If you see that there is something out there that can produce value for someone and you're not, it's a waste. I see it as a loss and a waste. And I was just seeing myself as someone like that because I had, amassed all this, tool set in my education, and I knew there was a way to apply it to Bitcoin, but I was just uh, there there wasn't the right arising. So I was constantly thinking, what can I do to just bring some of those skill set, if that's the right word, or just apply some of the things that I feel like I can add, and it's not available out there through other great sources that we have. And suddenly, with the ETFs, I had a great data set, and I started analyzing the data and visualizing it. Because part of what I teach in class is also data analysis and visualization. So I had pretty good experience there, and I just kept on going and putting out content, and it turned out to be the right time. People were very excited about understanding the data, and
I didn't get that. Could you try again?
Uh-oh, Siri sometimes attacks our conversations. This is the second time that's happened. I think it happened with Jeff Booth.
oh,
Make sure make sure you keep Siri out of our conversations before the three letters come knocking on our door, huh?
yes,
We're gonna keep that one in the show.
finding a way to contribute. Earlier this year, I finally found a team of through my prior contacts. There was four of us that decided to um, essentially come together, and we were all motivated and have enough. It was the right time for all of us to start a company. So right now we have Rusbe, me, and Zia. If you look up Zia, for example, I'll call him the Antonopoulos of Iran. He's the number one podcaster, educator, years in Bitcoin, super knowledgeable about the tech and all the bips, anything you want to ask. He knows about it. Then we have Rusbe, who's a great guy. Has experience in banking and sales and consulting. He's been helping a lot of people get on board, just like Zia has these like had these weekly AMAs where people would ask him about all kinds of things about wallets and security and bips, and he was just helping everyone free. So the three of us came together and decided, okay, we're doing this already for free. I was also running an education channel, BitGuide, which
Big guides.
we'll
Yep.
talk about it. Just putting out all this free content out there, and that helped us actually improve our knowledge about Bitcoin, right? So we came together and decided to basically establish a consulting company, and we have other plans for this. Once we hit enough of a cash flow, we will also expand this into a custody platform. But right now, I'm mostly focused on consulting and producing research.
So that research, I remember if I could find those, you partnered with, I think, Bitcoin News. Is that correct? Perhaps you can give me that website and I can drop that on here real quick. Or the content that you've put out in your first wave is impeccable. Do you know the website to, or is it the newsletter? Where do we, oh, here it is.
Yeah.
The Beehive.
Yes, Bitcoin News Research.
Yeah, this is brilliant, especially this BitPulse index. I mean, this one that came out, it kind of has these heat metrics. You call them speedometers, and it really breaks down everything in such a clear, concise way. People who are trying to get a little bit of edge when it comes down to their decision making. It's just so perfectly oriented, and when I read it, I was like, I'm satisfied. And I was already subscribed because we talked about it before I even launched, but I'm definitely an active subscriber now after reading these things. Talk to me about this Bitcoin News Research.
I still see the previous page.
Oh, do you? Oh, that's funny. Hold on. That's let me make sure I'm updating it right. Sorry about that. That's what happens when we're live. Here we go. Yeah. So again, the speedometer. Let me show
This
this
was
right here.
ETF.
Beautiful.
Yeah, go ahead.
Yeah, beautiful content. A lot of all you guys are contributing. Even Luke Mitchich, who used to be with CoinBeast, is contributing here. But I was really excited about Publius's BitPulse index, and of course, we should talk about your volatility adjusted power law. But just more ways that you're contributing, you're co-branding with Bitcoin News. Talk to me about Bitcoin News research.
Awesome. Yeah, so just on those speedometers, brilliant idea by Publius. Very, very helpful and nice. And what we will do is create a set of metrics and build the infrastructure, build the databases and everything that will feed the data, and then they will be easily shown through that speedometers. The whole goal is to create a dashboard with enough data that will help you understand what the hell is going on in macro, what the hell is going on in the futures, in the spot, on chain. So all of that in one place. As you can imagine, that requires a lot of data collection and processing. That's exactly what we're doing. In the meantime, we are publishing research on the things that we find interesting. So let's go back to one of, yeah, for example, a few months back, there was this period where all the institutional investors in Bitcoin ETFs had to report their holding. March 15, I believe, was their deadline. And a couple weeks after that, they have to disclose all the information. So we thought this is a wonderful opportunity for research. We went back and actually spent countless hours collecting all the filings from the SEC website. I forgot the numbers, but it was like something like 1,000 companies, 1,000 reports, and then we dug through all of them, selected the parts related to Bitcoin ETFs, and pulled from this analysis how much real institutional investment is being allocated to spot ETFs, essentially. So, and this touches very well on the on the importance of ETFs. And a lot of people were talking this is all retail and all degen leveraging. Jim Bianco, for example, is big on that, saying all of this money was from people who didn't know what they're doing. But actually what we find in the data is the seasoned veterans of TradFi spending serious money. One of them is the Wisconsin retirement fund.
Yes,
Guys
yes.
aren't joking. These guys aren't trading. These guys aren't in it for 2 years of quick gains. This is a long term. Yeah, that's exactly it.
There it is.
And we identified their portfolio and where Bitcoin sits. They're typically buying several ETFs.
So this is what the state of Wisconsin's pension fund is invested in right now.
Exactly.
Wow. As of that March date. Yeah. That is crazy. You did so much research. Continue.
Yeah, I mean, just so people know, this takes time. So I'm very skeptical of paying for anything. So I've signed up for many newsletters, but hard to just make sure that there's something that worth my time. This would honestly, just to shill it a little bit, this would be something I would personally spend time reading. So because we spend like 2 weeks for everything. Anyways, then essentially we with all that data we measured how much money is allocated to each of the ETFs. You can see in this chart how much money is in GBTC, BlackRock, and the other ones. And it turns out that we were able to account for $11 billion, around $11 billion of investment. And now if you compare that to the total investment, total assets under management of ETFs, it's hovering around 50 billion. And so as long as, up to that reporting time, 20% of all the money is institutional money. And many of these guys aren't really hedged. Some of them are, but a lot of them are long-term allocators. So that there dispels all the myth about everyone here being degens. It's about 20% institutional. The rest is, we still don't know, most likely retail, but there might be some other ways that we weren't able to account for.
But real quick on that, when you think about Bitcoin and its volatility, a lot of the people in Bitcoin anyways were exponentially degens. Talk about, you have day traders and then you have crypto day traders. Does it get any more degen than that? There's been for years
traders with 100x leverage.
Yeah. How much of that is on Coinbase, on all different types of Binance, all different types of exchanges that continually feed this volatility and in Bitcoin for the wrong reasons. So just because some stock market guys are in it, maybe for the wrong reasons, doesn't necessarily make it intrinsically wrong. It's just people working out their own incentives. And if they get wrecked, they get wrecked, right?
Yeah, and I don't know why people just try to bash on this and minimize it. This ETF thing was a game changer. Not for us. I touched none of them, right? Because it's not for me, but
doesn't affect you.
For people who didn't know better, or they just want, their money is stuck in that system, it's a good thing. And then the other thing that people like, again, Jim Bianco and the whole gang was saying, was that a lot of this money is just being dislocated. They're selling some other Bitcoin thing and buying ETFs. Essentially, if that's the case, it has no meaning, because you just sold, say, MicroStrategy or minor stocks, and you bought the ETFs because it's slightly more efficient. So that would mean there is no real demand, no additional marginal demand for ETFs. But again, here in that specific chart, what I'm trying to do is demonstrate how well day-to-day flows into the ETFs correlate with price. So on days where, actually on 3-day periods where we have consistent inflows, we also see the spot price going up. That means the money is new money. It's not someone selling and buying, which would be neutral on price. So that's another way you can essentially use the data to shed some light on the Twitter discussion where people just share their opinions.
Right. There's something else that you mentioned. It's like, or what that guy, what's his name again? The kind of naysayer about the ETFs. His name is
Bianco.
Bianco. Yeah. And it's like, he did highlight something where the ETF doesn't automatically equal new people into Bitcoin, because people who were in the stock market that liked Bitcoin, I mean, myself included, if I have money that's in the stock market, I'm going to apply to Marathon. I'm going to apply to MicroStrategy, because I want to expose it to the price action that I know Bitcoin is going to go through. And I'm not even scared of the potential dips, knowing that if Bitcoin goes down 70%, Marathon may go down 90. But he did kind of have a point there where people, let's just say people have $1 million allocated to Marathon, and they may want to reduce their risk profile a bit. The ETF is definitely a little more safe than a minor, and a little more predictable, or a little there's one less layer of unpredictability in an ETF than MicroStrategy. So have you noted, like, what he said about just reallocating from Bitcoin exposure to Bitcoin ETF? Did you notice that trend at all? Did you notice that statement to be true or false, or unable to tell?
Listen, that is a logical statement, and definitely a big part, not just a part, a big part of what we are seeing here. A lot of people were invested in many different things. Like I said,
Marathon hasn't gone up. Marathon was at $40, let's just say in January, or February. And ever since the ETFs have now matured to be 6 months old, it's still low, but Bitcoin is if you looked at the Bitcoin to Marathon price, that ratio is definitely lower than it was 6 months ago. I'm sorry, but continue.
yeah, and then these are all like indirect ways to invest in Bitcoin. ETF is the most direct, not really direct, but a much better way to speculate on the price of Bitcoin if you are in miners for that reason, or in MicroStrategy for that reason. And listen, there's also a big and interesting debate about whether MicroStrategy is a good investment or not. It's trading at a huge premium compared to the real Bitcoin they have, but some people say, oh, it's because they have huge potential in future. And but I can also see like the traditional analyst thinking, I'm paying a company that owns X amount of Bitcoin, but the market cap is like 3x that. Doesn't make sense. So it's probably overvalued. I'll sell my MicroStrategy and just buy the damn Bitcoin ETF. A lot of people do it. And it's not just that. We also have the cash and carry trade between the spot and the futures market, where, if there is a premium you can earn by buying anything in the futures, you might sell spot, buy futures, or vice versa, depending on the funding rate. So a lot of the flows that we see in the ETFs might be something that comes from somewhere else, or sometimes the negatives are the flows that go somewhere else in Bitcoin again. So it's not perfect data, but that was actually one good reason for us to go into the portfolios of all those firms that you just showed. Wisconsin Board Retirement Fund, they had no miners, previously. So we are able to confirm that this is a new investment. Um, and a few other people that we mentioned, a few other companies, we've looked at the history of the company. We've pulled some of the quotes from the founders. Some of them really show understanding and commitment to Bitcoin, rather than somebody who's was already in it, or somebody who's just there for a trade. A couple of them are actually establishing MicroStrategy like treasuries after ETF was approved, because that gave them a signal, for that signal of government approval. So I would say a huge part of it is dislocated money, but a very important part of it is just new demand, and that's gonna, if I had to guess, anyone who wanted to move money from somewhere else has already done. At least the first wave is done. The next phase is just a constant inflow of TradFi money into Bitcoin due to these ETFs.
I wanted to switch gears for a minute. I wanted to talk about you per se. Being a friend of you, I've watched your star grow. No Nick Carter, if you will. But
Right.
it's but especially this year, we're talking about there's a time when you may have had 3,000, 4,000 followers. And you have ever since the ETF and you're moving to this 21st Capital venture, you've 4x'd your follows. I mean, if you're going to buy something, you're not buying Bitcoin, you're buying the Sina stock. And the catch is, I guess I want to know, what do you think you attribute it to? How do you grow 4x in 6 months? Is it can't just be your capital company, because you had bitguides.io, you were publishing things and it wasn't sticking. What do you really tie it to the ETF? Was there something else that you did from your own personal branding? Talk to me about that a little bit.
No, honestly, I think it's just a matter of time investment. Um, since we established our company, now we also have a financial interest in being known. And before that, I had no interest in being known. I had even hid all my details, uh, and I was using my account as a burner, as a way to vent and talk to people and just chat with Bitcoiners and occasionally be toxic to crazy people. So it just had a different functionality for me. But like again, earlier this year, I found a reason to invest more time. That's a real thing. And then I solved my own problem, which was I wanted to spend more time, and I had no huge incentive, but now I do, and I get to spend quite a bit of time on the thing I like. And but still, it's a huge load as well. I mean, social media action is not cheap. We have to spend quite a bit of time, but given the circumstances, I think I'm at the right place. I'm not like other people who are just all the time there, and they're able to grow super super fast. But I think there is quite a number of people that listen to or sort of read what I post, and that's what you want, right? If you spend 2 weeks, producing a little article on a newsletter, you want a few people to read it, right? Otherwise, otherwise you wouldn't do it, right? So I think it was important for me to reach that minimum level of followers or engagement, so that someone reads what I say, and that's the main thing.
It's brilliant work, and I'm so proud of you. I'm like, hey, this is my buddy out here doing this thing, and I'm like, yeah, Cena, go. So I'm just so happy for you. And it's kind of funny. We kind of, with my podcast here, my work with Swan, you kind of started 21st Capital around the same time. So it's like these, we're these like low end, like not low end, but like we're people that are kind of in the background, enjoying our thing, understanding where we add strengths. We collaborated before in an article, now basically a year and a week ago, published on Simply Bitcoin. So we always did our thing, but we kind of both took this big step in at the beginning of the year. And it's just so happy. I'm just so happy to see you growing at this pace. I do want to talk to you about someone that I had the privilege of meeting back in January in person. His name is Fred Krueger, and he was kind of making his presence known much bigger and faster than either of us. His knowledge on the ETFs and how BlackRock works is pretty impeccable. He has story upon story about the inner workings of the stock market and hedge funds. And you had a conversation with him, one-on-one conversation with him. He had you on his podcast. How did that come about? Who approached who? I feel like at that time, like I was noticing that you were getting more attention, and then all of a sudden you collaborate with Fred Krueger and you just explode. Can you talk about that story of your interaction with him?
Well, I think just one day he sent me a DM on Twitter and said he likes my analyses and he'd be happy to talk. I don't remember much interaction before it. We might have exchanged some comments here and there, but I think he's a very smart man. He's a really good social media guy, and it's amazing because I don't think he had spent any time on Twitter before that. He had a super small account, as far as I vaguely recall. But as soon as he kind of allocated his mind, put his mind to it, he did amazing. And one of the great thing that I'm really thankful to him was that he kind of picked, uh, not including myself, but he picked good people to talk to. And when I watched his content, I learned a lot. I found a lot of interesting things that no one else was talking about, right? So he has this kind of good eye in identifying things that are interesting to me, but I understand it might be not interesting to many other people. So what he was interested in was the statistical analysis behind it, because most of the posts you see is kind of an account of what's going on. I personally wanted to just put in some more quantitative flavor to things, and he probably noticed that's something we can talk about. So he liked it, and he reached out, and we had a wonderful conversation. And yeah, I'm grateful for that.
No, that's brilliant, and it's nice for these now social media stars to kind of recognize where value is being created, and very few people are creating the value from a quantitative standpoint as you do, especially per, I guess, when normalized. Because remember, this is a part-time job for you, and this is a part-time engagement. This is a part-time job for me. This and Swan, and so we have families, we have our real life. We want to, actually enjoy our lives, but this is an enjoyable part of it as well. Um, I wanted to talk to you a bit about, I mean, you say you're a professor. Of course, you're a professor. You have degrees from ASU and MIT. What's your fiat job like? What's your academia job like? Where do you teach? Again, divulge what you want, but talk to me about your educational background.
Yeah, so I've loved science, since I was a kid. So I just wanted to go this route to wherever it leads and to the end of it. So I did a bachelor's in engineering. I did a master's in IT engineering. I did a PhD in business. That was where I kind of brought that uh, uh, math and technical background from engineering education to applied it to business disciplines. And that was where I learned a lot of the statistical techniques and econometrics and all. Then I worked in industry for a while at a few of the one of the big tech companies, and consulting for a few other tech companies. Then I moved to MIT for a postdoc, about 2 years, and then began my job as a professor. So most of the day-to-day job, most people might think of as a business professor, think of a business professor as a kind of a instructor, but that's actually not most of my job. Most of my time is spent on research. So my job is to go out and think about a business problem that is no one has answered, and is interesting and useful, and somebody's going to make some money with it, and it's going to solve someone's problem. It could be a humanitarian problem, but most of the time it's also a financial, a business problem that a manager can deal with. Then typically there are other people who do simulation and modeling. I mostly analyze data to answer these questions. So you're on your own. You have to go find an interesting question that people will value, and then you got to find the data for it. Then you got to analyze it and write the insights. It's kind of has an entrepreneurial feel to it. You're fully free, but then you have to live with the consequences if you pick the bad topic. If you have a good topic and there's no good data for it, you're in trouble. So and you can imagine this takes years. Like a single paper in a top journal takes 3 years. You probably won't believe it, but it's in the first draft takes usually a year since you generate the idea, and then you've solved all the aspects, and it's probably like 60, 70 pages of writing. Um, and then the same amount is spent in reviews, because there are other people in your field which are smart people and have big egos, and they want to kill every aspect of your work, so you have to engage in several rounds of back and forth, and there would be judges, editors that would decide if you've answered the questions properly, and if all goes well, you get one of these. And in my field, like, these are huge. Like, you need probably 4 or 5 of these projects, and that gets you to tenure. Um, so it's heavy, it's deep, and you need a lot of time spent, and it can actually be very bad for your health as well. So you got to make sure you keep thinking about exercise. And I personally, I have no problem sitting at my desk for 7 hours. When I was younger, I could do it, but now my back, my shoulders quickly remind me that this is, you got to do something and move. But that's
Oh man, no, continue. I know, me being a gamer for years, I know how that feels, and I'm just happy that I'm also a basketball player. So it's like I'm doing other things besides, because you say 7 hours amateur, like play Civilization for 12, 13 hours, and that'll make you a
I
believer.
remember playing Civilization, and my mom had to drag me to lunch.
Yeah.
It's
One more turn, that's what they used to say. Continue. I'm sorry.
absolutely, I remember, yeah. So, and I had a horrible chair. Anyways, and then the rest of it is teaching, which is also rewarding and interesting. But teaching is mostly, telling other people what you think. You're not necessarily discovering anything there. But you see the results quick. You move somebody from a place where they were developing to a place where they can get a job. So that's also very nice, given that the results of research are so out there, and you see the value in the future. Also, uh, just from a Bitcoiner perspective, I also have a lot of concerns and questions and criticisms about how the system works in academia. It has issues, it has problems, and being in Bitcoin actually helps me balance that out, because I'm the kind of people who looks at problems and wants to fix them, but this will get me into trouble. So I'd rather focus on Bitcoin when I'm fed up with the day to day.
Yeah, that's the funny thing that I see in parallels with you and me. It's like, people who know me, they know that I work in the military industrial complex. And so it's like, I can't fix that overnight. And me saying, screw this, I quit, because it's so fiat. That's what they call in stats for sports, VORP, value over replacement player. Me quitting, it would be like, okay, it's not a government job, it's private industry, but the ability to replace my capacity is not so hard as, oh, if Steve Jobs were to quit Apple, they would have gone down another path. But what I can do, I can be my Bitcoiner, Austrian economist, hard money self in that world, and try to orange pill as many people as I can. Or I can bring those principles that I find from being a proof of work person, from bringing the things that I get from Bitcoin and applying it to my job. And I could potentially either impact that industry as it is, move the needle a little bit, or even be a good example for those around me. In academia, I've had many of things to complain about when it comes down to its fiat dynamics, but it's good to see that someone like you is essentially a poison pill in their institution. So it's great to have you there. I do want to talk about I wanted to make sure I had a chance to talk about you before I dive into the things that I'm always kind of thinking about, this Grayscale ETF. And I've reached out to you before on this matter. Grayscale, and if there's a website about this we can go to and we could talk about it while looking at a chart. But Grayscale seems to just be have an infinite amount of Bitcoin. And of course, we know that's not true, hyperbole. But and they were somehow there's this dynamic where they made a deal with all these newcomers to the ETF market. Well, they were a trust, they became an ETF, and then so did all these dozens or so others. And they're essentially selling their Bitcoin to these new ETFs. As they go down, IBIT goes up, FBTC goes up, VanEck goes up. When does the well run dry?
Yeah, it's very interesting. Generally, people look at what Grayscale doing, losing money all the time, and they think there is some crazy story behind it. My first choice is just incompetence. And then if I have more reasons or evidence, I'll go make a more complicated theory. But if something is stupid, it's just stupid. So, Grayscale entered competition with many other ETFs, thinking the people will pay 6x higher fees for the same exact product. ETFs are pretty much the same, very minimal differences in how they're managed, and in practice you're exposed to the same exact thing. So why would you even change your company? It's mostly institutional inertia, having prior contacts, prior network that might push you to choose this company or over the other one. Better relationship, customer service. But the actual Bitcoin that you get exposed to, it's the same damn thing. Why would people pay 6x more? Why did you think people are so dumb to stay with you? There are a couple theories. One is that selling Grayscale and buying BlackRock is a friction, is an extra transaction, and you might owe taxes. So that could have held some people in, but that also runs out of steam after a while. There's just so much people are willing to pay more to make it more tax efficient or transaction efficient. So what they should have done is to reduce their fees, maybe keep it a little bit higher than everyone else, because they had a head start. They were the biggest fund. They had probably the biggest Bitcoin ETF brand. But having BlackRock and Fidelity and others there, they also didn't have much of a brand advantage. So it's just, I can't see any good reason for them to keep the fees that high. And what we see is, people just acting as they should have and as rational agents, and they are moving out of GBTC, and some might just be cashing out, but I suspect a lot of it is being recycled. And actually the data shows that a lot of this is being recycled to other ETFs. If you overlay GBTC outflows and BlackRock inflows, there's a pretty good match. Any period where we had a huge amount of GBTC outflow, we also had a spike in BlackRock and Fidelity inflows. A lot less so in ARK and Bitwise, but so that's a great indication that quite a bit of it is recycling, and some of it is probably just cashing out. And what I was expecting was a huge rush out of GBTC in the beginning, which will die down and turn into a slow leak out of GBTC. And for a while, that was exactly what was happening until March. You see it on this chart. But then we saw another spike, which completely changed the game and really surprised me. But then again, it kind of began following that curve. Huge amount of people want to run out, exit. And then once that flow is exhausted, then you get this the small number of people that day to day figure it out, and it's the right time for them to move out, and they do it. So I'm expecting this slow flow, $30 million a day. Actually, the 5-day moving average is about $32 million a day out of GBTC indefinitely. And it's kind of uh, it has a kind of a minimum, obviously, because they will run out. They've already ran out of. They've already out 55% or so of the whole Bitcoin they had at the beginning of the launch,
Mhm.
and I look forward to seeing it go down to, much lower, probably half of what they have right now before uh, it really stops. But as long as you have higher fees, it just doesn't make sense. People will keep going out. It will slow down more and more because there would be no more Bitcoin left. But I think they will at some point capitulate and decide that this is not sustainable. If they want to keep that fund alive, they have to do something to the fees. They are already playing a game with this mini ETF, which is a second ETF they'll create with much lower fees, and the existing GBTC holders will be paying a blended lower fee, which would still be
Mhm.
a lot higher than other ones, but a lot lower than today. So that might help, but this is not sustainable, and they're just playing a crazy game. However, I also did another analysis and looked at their fiat earnings, right? So they are getting a percentage every month um, from holding these assets. That's exactly the fee that we were talking about. And because Bitcoin has gone up, that percentage, the fiat value of it hasn't really gone down as drastically as we see on this chart. It was like
It's essentially the same if you consider that if Bitcoin's 60,000 now, they're collecting the same fees as when it was 30. Now, of course, maybe half of their money is gone, so it's not exponentially lower, but it's not that much lower than it was, if not close to the same.
exactly, it's 20-30% lower.
Yeah.
Uh, but that was when price was higher, so probably slightly more.
Mm.
But they're not feeling the pain in their bank account. But that's
Mm.
such short-term thinking because you've lost the basis of the business. You're just temporarily keeping that cash flow, which will inevitably go down and down until you are forced by the hand of market to make yourself more competitive. It's just nothing that we didn't expect. By the way, those huge spikes that I was talking about, turns out there is uh, there were just huge sellers, bankruptcy states, and other people that added fuel to this exodus. But once they're gone, we'll just see the normal investors one day
Right.
figure. I myself, I wanted to make a change in my retirement account. I haven't done it for 3 months. Just laziness. I have too many other things to think about. Most people are probably right like that. So little by little, people get to it, find the time, and make the switch. But the bulk of the exit is done.
Yeah, it's interesting I mean, one that retirement dynamic. I mean, you just don't get used to touching or looking at that money. And so something where most people who are investing in this is generally pensions, retirements, big money, family offices. They make a decision, and that decision could happen, you know, 2 months from now, 3 months from now. It's not like option trading where you're watching that sucker every day, especially if it's short-term option trading. It's not like even a lot of speculative Bitcoiners where those speculative Bitcoiners, they don't hold for any longer than a year. And so this GBTC will shake out. It's just going to shake out a lot in a lot longer time horizon than a lot of people would expect it to, even with those irrational fees. Now, there's something else I wanted to ask you. I just wanted to make sure. I'm pretty sure I'm just being dumb, but these numbers where there's actually an inflow of dollar value, is that just because Bitcoin happened to maybe have a large spike and maybe not that big of a sell off right here? Is that what it boils down to?
I don't see your mouse, but it looks like
Oh, I'm sorry, like the 63 million, 32 million, 28 million in the May timeframe. Is that just a Bitcoin? Bitcoin is going up, therefore the dollar value of the ETF is going up?
no, these are just day-to-day flows. So on that day, there was
People bought GBTC then.
Yeah, some people are crazy
Interesting.
like that. But the point is that was a game changer. That was the first time we saw the exodus end. Like I said, there are people who have pre-existing relationship with Grayscale, and they have their own reasons. They just, if there is some money to allocate, the ease of going with their old friends is more valuable to them than the fee. For a portion of people, that might be true. Those people bought at that time, and that's a good, kind of a signpost that says the bulk of the exodus is done. Right now, we are getting some people exiting, some people entering, so it's kind of balancing out with a bias towards exodus. But that was the point I knew, the massive outflows are probably done.
Okay, yeah, I'm scrolling through your Twitter page. Don't worry. I think everyone knows that we're all going to have our little commentary here or there. I want to talk about these right here. Um, this is the daily flow of FBTC. We already saw GBTC, and then we also have BITB and ARC. What is B? Who owns BITB?
That's Bitwise.
Bitwise. Okay,
Yeah, great, good Bitcoiners. Yeah.
right on. And if we could, again, you already said there's not much difference between these others, and you could add you can add IBIT to that from the BlackRock one. What when we look at these, is there anything to tell that differentiates? Like, for instance, let's just say I have a retirement, and let's just say my retirement is really good and I'm able to invest specifically in, one stock or one ETF. What am I basing my decision on when I'm choosing between ARCB and BitB, FBTC, and the other 9 or 10? What's my decision criteria that I should be looking at?
I would say the number one is fees. These are all commodities. Like, in theory, they should give you the exact same thing, exact same exposure. They might have, like I said, very minimal differences in at what hour they do the transaction, or how perfectly close to the spot Bitcoin they keep their funds, or things like that. But it's, for all intents and purposes, that doesn't really matter. Fees will be the biggest determinant. Now, fees are complicated because some of them offer uh, uh, short-term bonus, or I should call
like
it.
like a credit card, like, hey, 0% fees for the first 12 months, and then they stick you with the fee later.
Yeah, once you're stuck, once you're set up and you're not going to move, the actual fee kicks in. But also, they are really low fee overall. So it's not a bad. There's nothing negative about those fees other than Grayscale. It's typically aligned with the lower end of ETFs, probably because there are so many big players involved. So once you've figured out your fees, the next thing is the reliability. Like, a lot of people might choose BlackRock because they have better brand and they're probably more reliable. There's also some good reason to choose Bitwise, for example, because they have disclosed their addresses. They seem to be a lot more focused on Bitcoin, and they also have some crypto plays, but they are specializing in this thing. So, but there are other small funds which you don't know. Maybe tomorrow they'll go away. There is this DeFi fund that has gotten like 2 days of inflow since the start, and nothing else. It's, when you look at the chart, I don't even post the chart because it's like a deadline. So those things, they might go away. They might have bad management. They might have crazy changes. So that gets to reliability, right? But even in that fund, you're getting exposure to the same thing. Your risk is with the management. For example, I personally wouldn't go with Grayscale even if they had the same fees, because I don't know. They're just changing their key people, the CEO, and it's a little bit seems like they're struggling with certain things. But BlackRock, they're a safe bet. They have like 200, like probably thousands of other deals out there. They're not going to go bankrupt. So that's kind of the thinking. But other than that, it's just commodity. Finance and TradFi has a way of selling us something that we should directly be able to buy for a fee. So they just get something. They just take the air and repackage it as an ETF, and they sell it to you for a fee. And it's the fact of today's finance. It's all commoditized.
Right. It's all commoditized. Here's something to think about. So again, Wall Street has a good job of packaging financial products to easily consume, whether for family offices, hedge funds, or retail investors. This ETF, it's out there, it's popular, there's multiple products. What needs to happen to the ETF, one or many of them, for any retail investors out there, the individuals, the me and yous, to run away and pile into the actual real asset? Is could anything really happen? Is that inconsequential? Are people going to forever look at ETFs and Bitcoin as the same thing? What needs to happen to say, I don't want to touch that, I need to get the real thing?
Listen, I'd say there's probably three reasons, or three main reasons that drives demand for the real Bitcoin. One is speculation, like people want the Lambo. The other one is people who have a legitimate use. They want to make a transaction. They want to send money to someone that's difficult in the fiat world, and or for whatever reason, it's cheaper in Bitcoin, it's easier in Bitcoin, it's faster. Then there are other people, probably more like you and I, that have all those things, but they also have a significant, ideological, or maybe I'd say just interest in money that's out of the fiat system for various reasons, like saving yourself from inflation and helping to improve things. I genuinely believe is that Bitcoin is a force for improvement. It's kind of a lid on the rampant deficit and money printing that is giving rise to a lot of our social problems. So I like Bitcoin to win, right? Even if I have no transaction need right now, which I do. But those three things are the main drivers. Speculation is probably 98% of it.
And when you say speculation, because people are speculating in the ETFs, like I can buy $100 of the ETF and I can get out if it goes up to 110. But what do you mean by speculation on the underlying asset?
I mean, it would be the idea that someone just wants to make more dollars. Just buy Bitcoin and get rich and sell it, right? The only reason people buy Bitcoin ETF would be that, right? Because you can't do any transaction with it, right? They just want a sound investment, I guess. And it's actually a lot better than putting your money on a crypto exchange. There is at least some guarantees you're not going to get hacked. If you get hacked, there are mechanisms to return your money. So you're not going to get a crazy guy run with your money. So those are all much better. And also, TradFi investors are on average more mature and more experienced. They have access to financial advisors and this and that. So much better than the average crypto bro who just signed up on Binance. Now, where I was going with all that is what would take people to, if you just want to speculate, you'll stay with the ETF. If you just want to benefit from the increase in the price, you'll stay with the ETF. If you have a little bit more appetite for risk, maybe you hope that in future they'll add some derivatives on top of this. But right now you have those in MicroStrategy. You can buy calls, you can lever up and things like that. A very little reason to want to use the actual coin, unless you have a legitimate, real economic reason. So my point is, if that economic reason becomes more strong, like you have more people who accept, more places to spend it, more businesses who want it, more users, all of which are happening, by the way, and they're happening fast. I was Last week I was in Lisbon for vacation, and uh, vacation slash work. I found zero merchant that would accept Bitcoin. I was looking for signs of Bitcoin. No one was accepting it. And they didn't have great infrastructure for, they couldn't even accept dollars most of the time, right? If I had cash, because surprise, surprise, there is this crazy fee they have to pay to convert that into their own, to euros, for example. So there's this artificial cost that government has imposed on making transactions inefficient. But as people learn more and more about Bitcoin, I was just dying to tell the guy, hey, if you accept my Bitcoin, there's no fees, no nothing. Hopefully Strike, I don't know if Strike is active there, but they're expanding rapidly in Europe, and that would give you immediate settlement, no fee for the most part, very little fee, minimal. Wonderful thing. This is just a matter of time before people figure this out. And it's kind of one of those things where it doesn't happen, doesn't happen, doesn't happen, and then it happens all at once. Once somebody shows the way, everybody else does it. So once I have a reason to spend Bitcoin, I'll move my money out of ETFs and hold it myself. Then other things that can happen is if we have some draconian or semi-draconian legislation on the ETFs, maybe they'll want to tax you more heavily. Maybe I don't know, they place some crazy limit on you, which is we have come about to expect from people in charge. Your money is stuck in that ETF, so there is many layers between you and your money. Many people have to approve. BlackRock has to approve your sale, and then the exchange, and there are courts that can block it. If you have some fear about accessing your actual money, for example, let's say if they put in a limit on how much you can withdraw, right? That would be a huge risk. If I was in the ETFs and somebody tells me there is any limit on withdrawal, I would just take all of it out.
Right. Isn't that crazy? Hold on to your thoughts, but it's like every crypto exchange right now is placing those limits. Even Strike, Strike has limits on how much you can withdraw per day. Venmo, you want to buy crypto on Bitcoin on Venmo? There's a limit on how much you can take off. And it's so funny that people still haven't woken up to what needs to happen. Is Bitcoin needs to go up to 500,000, and then there needs to be horror stories about how I had all this, and it needs to go to 500,000 for like a couple days, and people want to get rid of it or get it off the exchange so they can go buy their Lambo, and they can only take $10,000 off a day, or they can only take $25,000 off a week. I need to see that happen, and that will cause self-custody to happen for the next cycle 100%. I'm sorry, rant over.
Yeah, listen, and what you're doing, what I hope to be doing is educate people about the huge difference of really owning money or having someone between you and money. You can't trust anyone, especially with your money. Something crazy will happen for sure. And people didn't get Bitcoin at all previously. Right now they get that they can make money with it, so they're into ETFs. The next step is they get the idea that you need to own your damn money, right? No one is to be trusted with money. They will play some games at some point. They're in it for their own gain. And there's literally, after Bitcoin was invented or discovered, literally no reason for someone to hold my money. It's just a piece of information in my possession, and who the hell are you to tell me I have to wait 2 days, 3 days, and pay this much fees and have it confirmed by 20 different lawyers before you can move my money?
Instant settlement and a bearer asset. These are the kind of things that we need for ourselves, and you and people like you and me need to try to convey to others, and it's just a matter of time of when people will learn, and hopefully they learn before they are a casualty or a statistic. Sina, that is our time for today. I can't thank you enough for joining me. Brilliant stuff. I can't wait for something else to happen with the ETFs to have you back on and to give your brilliant analysis and research. Everyone, you guys can check him out at 21stcapital.com. Sina, again, thank you for coming on. I appreciate it.
Thank you very much. I had a great pleasure.
That was my buddy Sina. Again, like me and my only collaborative effort of writing was with him. You guys can check that out on the Simply Bitcoin Substack. It's just a privilege to see your friends in the Bitcoin space grow and do great things. And everyone in Bitcoin is kind of on this similar path where we're helping to change the world one day at a time. And we have our low enough time preference to understand that, there is no get rich quick scheme with Bitcoin. Maybe there was a time in the early 2012, 2013 timeframe where Lambos were coming out and people were getting rich, but people were also losing tons, whether they lost their keys, they lost a computer in exchange, got hacked or shut down. We're in a time frame where where Bitcoin is a legitimate asset. Other groups of people are recognizing it, and it's on us, not only me and Sina, but also you people watching. If you care enough, share these stories with your loved ones, share these stories with people you work with. It could be some critical decisions need to be made now, and it could help someone. Anyways, rant over. My name is Sir Ulric, like my father before me. Tune in next week where we have another brilliant Bitcoin guest.